Onward, we're getting down there now. A couple of small assignments yet for Project 2, and then, of course, writing the final paper. Um, in addition, you'll note, I think Chapter 14, which I think is this week, is the last assignment that you have. Worked out kind of nice if I look through the book after Chapter 14. It really becomes there's not a lot of problems in there. I could make assignments that would simply ask questions that would require a written response, but you get that from the quiz that you take over the chapter. And in this case then too, it also, I'm hoping, allows you more time to do some studying and looking at the company that you've chosen and their financial statements in order to do a good final paper. So that said, the next part of your assignment for Project 2 is to do a full outline, and I kind of added a few things, and this is what an outline kind of looks like. This is the format that they allowed, I guess, within Brightspace. It's not my preferred format. I'll show you a couple others, but it works, right? And if you use this one, something like this, that would be perfectly fine with me. So I put in here each outline must have, right? You have to have an introduction and a conclusion. So, put that in your outline. Here's my introduction. I'm going to summarize all of the major items of the paper. Those things right there, those four things. Okay. And in the end, too, and I didn't put this in here, and I should, maybe I'll try to add it, but in the end, too, you're going to make a recommendation about whether you think a person should buy or sell, perhaps hold that particular investment or that particular company if they were going to do some investing. Okay. In the conclusion, you'll do something similar. You're going to re-summarize those things, and the summary of those things can be very brief. It can be, in the introduction, you can say, this paper, within this paper, I'm going to talk about the history of the company, the industry it competes in, its strategy, and provide a detailed financial analysis. Boom. Okay. Conclusion, same thing. Of course, in this paper I did talk about, so then it becomes past tense, of course. So, okay, these you have already done, right? You've already done an outline of the history, the industry, and the strategy. So include those in this. Make sure you add those, include those in this overall outline. Okay, pretty much just like you did, with changes perhaps based on the feedback that I had given you. Then we get into the detailed financial analysis, and of course this should be the main point of the paper. And in that, right, you're going to provide some reviews of, and I put over time these things, right? Perhaps the income statements, the balance sheets, the cash flows, some ratios, and some extraordinary items. If you look to, I want to point this out in the actual assignment, which is located under the content section 2, this one right here. You'll find that I say that I leave this to be a little bit ambiguous, and the ambiguity, I want to kind of explain that, lies in your perception of the importance of maybe some of the different financial data. And what do I mean? And I say that different industries have kind of different standards maybe, or it's going to look very different in how it's reported. Okay. Banking industries, some of the key ratios we always talked about were efficiency, return on assets, return on equity, and some of those are kind of important in other industries. But I guarantee if you went to a banker that was at any level up, a vice president up probably, and you said, hey, what was your bank's ROA last year? They would know. If you asked that of a car dealership, they probably wouldn't have the foggiest clue. Okay, maybe bigger ones would that are way up at the top, but for the most part, not as often, right? Okay. Something else. Let's say if you're a retailer, let's say you're Walmart. Okay. You've got sales and you've got cost of sales. Well, Walmart doesn't make hardly anything. I don't know that they manufacture anything. So their cost of sales is typically stuff that they've purchased directly from the manufacturers or through some wholesalers. Okay. That's their cost of sales. And then they have a gross profit. But if you're looking at Facebook, well, does Facebook have that same kind of cost of sales? They probably list some cost of sales, and a person might have to drill down and figure out what that is. But it's a completely different model. Okay, and so I'd like to say that we could, everybody could review everything, and I could give you some real good ideas about how to do that. But each business may be a little bit different, and you guys selected quite a few different businesses, and so they're going to be a little bit different. If you got some questions about it, pick my brain. I'm fine with that, right? Okay. So read through that, and you're going to do the full outline. So what are the types of things that I'm looking for here? Well, I went back to my WD-40. I like WD-40 for this because it's a relatively small company with a pretty focused strategy. Okay, it doesn't have, well, it's not doing very good today, but anyhow. So I go to FINRA and I give you the FINRA and I type in the WD-40, and this is the basic thing that I get. If I want to take a look at the financials, I can click on that and it brings this up. And this is, this is a nice, down dirty view, I guess. Pretty good look. I can expand to that too, which I've done down here. And the old way that they presented this was much better than this. I wish they still did that, but they don't. And so what I did is I exported it into a spreadsheet. And I exported the income statement, and then I went to the balance sheet and I exported that, and then I went to the cash flow and I exported that all into one spreadsheet. To do, once I got it, these all came up in separate workbooks, and so you can simply, right click on that. You can say move or copy and move it to, in this case, I've only got one, or I could do a new book, but I don't want to. And so I moved it to there. That way I've got all three of them. And then, of course, if I were you, I'd just save that so you've got it in that Excel workbook so you can kind of look at some things. So what are the things then that I say that you ought to look at? And, oops, let me go back to here. Income statements, right? So here's their income statements, and I've got them from 2017 to 2021. And I say in oftentimes is that don't ignore the obvious. Don't ignore the major data points, and that is that they kind of got goofed up the way they express this, but you got total revenue, you got your total cost of revenue, which should equal your, and it does, your gross profit up here. Normally I'd see the gross profit down here, but in any event. So I've got their total revenue, right? And so I just, what's some of the basics? Well, from 2017 to 2021, it's grown roughly $108 million in revenue. I think in WD-40's case, this is just the real number, so I think it is $108 million in overall revenue. Well, I went ahead and I calculated the growth rate on that. Which is a annual growth rate, okay, a compounded annual growth rate, CAGR, okay. I used, so when I did this, this is the end of 2017. So I went end of 2017 to the end of 2018 to the end of 2019 to the end of 2020 to the end of 2021, and I just got four fingers, and so I used 4 as my number of periods. Okay, of course my present value is just that, and I put it in as a negative, so I get a positive number. My future value is that, and it gives me a compounded annual growth rate of just about 7%. Okay, something I can put in my paper. And you kind of go through some of these things, and you may want to know, how they're doing, what's their cost of revenue then been growing at? Well, it went from 166 million to 224 million, so it only went up 60 some million. Okay. So I kind of, let's see if that'll work, because these are negatives. So I'll go copy. Not sure if that's going to be and paste. Yeah. Okay. So it did work. So it's gone up by 9.13%. So my cost of goods sold is rising at a faster rate than my total revenue, which actually should then make my gross profit growth even less. And it is. Okay. And so those are some kind of cool things. So, okay, so what do I put in my paper? What do I put in my outline? Well, I put in there that my total revenue is growing at a nice 7%, but unfortunately my cost of goods sold is growing a little bit faster, which necessarily then means my gross profit is growing at a slower rate than my total revenue. Okay. That happens sometimes. I'm still getting a 5% growth in total revenue. That's not all bad. And then I cruised down and I did it to my earnings per share, and I got a growth rate of 6%. So that's better than my gross profit. Okay, so they must have saved some money in some of these other expenses down here, and they probably did, maybe interest expense or some other things like that they may have saved some money in, to get their earnings per share back up to a growth rate of a little over 6%, so a little closer to my total revenue. Okay. Kind of some interesting things, and you just need to keep looking at these and look at them and look at them and look at them and see what you find. Okay, and run some of these figures. If you see something that looks a little bit weird, their income statement's fairly straightforward. Okay, there's not a lot that jumps out at you here. You guys may find some things, especially in some of your companies, that really were affected by COVID. Okay, well, they may see a big drop in income, and this company had a bit of a drop, right? Went from, in 2019, which should have been a full year revenue of 423, and it dropped down to 408. I bet you if I look at their annual report, which is what you should do, I would find that was probably pandemic related, and then it took a huge jump, okay, in 2021. So getting kind of caught up, and it looks like the trailing 12 months, it's improved even a little bit more. Okay. Then I might flip over to the balance sheet, and I might look at some things here, see what's going on. Total assets, that's a steady kind of a growth. That's not too big of a deal. Current assets, look at that though, a big jump from 2020 to 2021. I wonder what that is. Well, shoot, that's 60, not quite 55, 56 million. And geez, roughly 30 million of that's just right in cash. And it looks like there's 14 million in inventories. Okay. And so that pretty much accounts for it. So they've had a huge increase in, I think their receivables were up too. I'm sorry. Yeah, receivables took a decent jump too, about 10 million there. So those three things are what accounted for the increase in the current assets. That's something to report, right? From last year to this year, we had this huge increase. And so that's one of those extraordinary items, maybe, that I would tend to look at. Okay. Total non-current assets, it's been bumping along, increasing, but that's what you'd expect. I'll bet you this is probably increasing at close to the same rate that their revenues have. So they need some other assets, right, to grow those things. Okay. Yeah, I can take a look at some of these. Yeah, they had a decent jump in net property, plant, and equipment. So I don't know what's going on there. We may have to take a look. These all just look like regular kind of growth. Again, construction in progress and advance payments and a leased property, plant, and equipment. So there's some pretty good jumps there. So I'm wondering if they're building a new plant or something. This isn't going to tell me. I'm going to have to dig out the annual report and take a look at it. Okay, and I've showed you guys how to find the annual report, so I'd take that out and I'd try to find that and see what's going on. And for now, for the outline, you can put this information. You might put a little note yourself, or you note to me that you're going to look up and see why was there an increase in the construction? It looks like there's an increase in pretty decent increase in some plant improvements, those types of things, or maybe new construction, gross property, plant. That's up about 14 million. Okay. And then liabilities. Had some weird things kind of going on here. Total liabilities, I'm sorry. Went from 157 up to 202. So we had a big jump, and this is from 20 to, or from 19 to 20. So we had a huge jump, and maybe they just had to finance some things because of COVID. Maybe they decided to refinance some things or something because of low interest rates. It's very possible. Current liabilities actually went down. Isn't that interesting? Bounced back up then. Payables, same thing. They actually increased a little bit there, but jumped up quite a bit there. Trade and other. It's a little jump there, but I get down here and it gets, bank credit. Well, that went away. Total non-current liabilities is where it happened. Okay. And it kind of looks to me like they must have issued some more debt in 2020, that would be. And they issued a big chunk of debt possibly. And possibly it was just, remember we had some current assets that really increased and whatnot. Again, possibly it was just because the rates were low and they said, this is a good time to lock in some low interest rates. And they may well have. I'm going to have to dig out the annual report to take a look at it. Okay, I might be able to verify some of that by looking at the cash flow over here. And this stuff's good. You need to read through all that. But in this case, I'm trying to verify the financing activities. So cash flow, negative. Oh, looky there. Proceeds from issuance of long-term debt. So in 2 consecutive years, 30 million there and 52 million there, they issued an additional $82 million in long-term debt. Okay, and again, I need to get out the annual report, take a look at that, see what their motivation was for that. That's what's going to be in my final paper. Okay, is why did they decide to issue that long-term debt? I don't see anything in their annual or in their financials here that says there was any need to. It kind of looks like they just might have been taking advantage, but I'm speculating at this point. I need to look that up because that's what needs to show up in my paper. The cash flow, we got cash flow from operating activities. That's just their, when you basically the profit, add back in depreciation and a few other items. That's kind of the down and dirty way to look at it. But I also want to come back here and say cash and cash equivalents, some nice increases, kind of a decrease there, big increase there, nice increase there. Looks like it's dwindled a little bit. Maybe they're paying down some of that debt or something. You got to pay some income taxes, et cetera. Changing cash. Okay, so those years were big years, but that looks like it was because of the debt that they issued, that they had positive changes in cash. Okay. They had some negative changes in a couple of these other years, so got to kind of look at those and look through the various years. Probably going to have to look at all those annual reports. The other thing I think I say in here, and so I'm rushing through this a little bit, I'll talk more about these things too as we get in these final weeks. Okay, but I kind of want to give you a little heads up so you can put some detail in your outline. But I also want you to maybe take a look at some of the ratios, right? And if I come up here, operating performance, my guess is that's going to take me to some ratios. Let's take a look at what this says. I didn't want to do that, I don't think. Sorry. Yeah, operating, we've got return on assets, return on equity. Okay, these are kind of some important things, and these get back to some of the things here. I was talking about the various growth rates between the total revenue and the growth rate of the cost of goods sold and the gross profit. Okay, so my suspicion is that their gross profit margin has decreased a little bit through the years, right? And I got 2019, so I might download this too. So I look at their gross margin, and it's 50, from 2021 54, 54, 50. It's decreased a little bit through the years, right? Not a ton, but it's decreased a little bit through the years. Okay, and that's kind of what I suspected based on the other thing. And so these are this is one we used to be able to toggle and just look at, which was kind of nice. But these operating margins, okay, this may be more important actually than looking at some of these things, because it just kind of verifies or makes it a little simpler for you to figure out, right? So operating margin, has that increased, or yeah, it looks like it's decreasing from here. Was a tie. There was a tie actually. Down to 17 in the trailing 12 months, right? Down to 18, right? That's but a big drop there in the trailing 12 months. I'm not going to be able to find that on the annual report. I might be able to find that on their most recent quarterly to see what's going on. Okay, so then their net margin, which is going to be their revenue, basically it's 100% minus your cost of goods sold minus your operating margin, is going to give you this. And again, I suspect that that's gone down. Okay, it's gone down over those few years. Okay. Days outstanding, those things, receive or turnovers. Take a look at those. Some of those can be, their fixed asset turnover. Ooh. So they've been increasing their fixed assets but decreasing the turnover rate. That's not necessarily good. Well, except their total asset turnover rate stayed kind of steady. So their fixed assets grew. Probably their current assets might have gone down over time. Okay, I'm getting rattly here now, so I better kind of get to the end and let you guys take a look at that. But those are things that you need to put in there, right? The extraordinary items are some of those things that I talked about, like the increase in debt, whatnot, that I'm going to have to go back and look up. Okay, get the basics in there. Make note of some of those extraordinary things. Most companies will have them. Some may not. Some is just going to be straightforward. Okay, but make note of some of those extraordinary things that might have happened. And those are all things then that you're going to talk about in your final paper in the financial analysis section, right? And then cite your probable sources, and for everybody that ought to include the annual reports for, in my case, for sure those 2 years that they issued some debt. Okay. I'm probably going to look at all of them, but whether I use some information from all those, I don't know. But for those 2 years, I'll bet you I'm going to go find some information about why they issued that particular debt. Okay. Yeah, I better quit. I'm getting too long-winded and don't want to bore you guys to death.